presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Hi, everyone. No growl. This is Basil Chapman sitting in for Tom O'Brien. I do the 10 o'clock to 11 o'clock show on TFNN 5 days a week. And that's my service here is the opening call daily newsletter. And we're looking at something very interesting here, because within the context of markets, there are patterns that I look at all the time. One of the patterns that I look at is, let me just draw this in here because some of you are new to my work. I thought I had this already. There are three patterns that I love to look at. First of all, I start off by trying to identify the lowest low bar and merely count each successively higher peak. And that's as simple as that. 1 penny above the previous peak alphabetically starts the next letter B, and 1 penny above B starts C. You go all the way to a G, but at D, the fourth highest peak, other things can happen. You can have your sharpest decline. Look here in the Dow. Peak D in the top on the 5th of January at 36,952. And you could also recycle and continue higher. So most importantly, that's the pattern that we try to identify. Once we've got the buy signal, a buy signal that's upgraded to a buy mode means that you should go to at least 4 higher peaks. That's kind of its obligation in the Chapman wave. I also look at 3 patterns: straight up, straight down, straight line up, straight line down, cup formation and arch formation with a combination where you can go down sharply, make a lowercase h, and you take that out, and that becomes a very big negative if it closes decisively below. And on the upside, if it closes above the green left side point, that is positive. So with that in mind, let me show you what we're looking at. We're looking at the Dow getting to that peak D. We've been in a buy mode for subscribers to my opening call from the 15th, just under 33,000. We still have our long position way back from the lows of 2020. What we're looking at is the peak D failed to get to the 35,824 level, so that's going to be the big struggle. So that's for the Dow. There's a daily chart, there's the weekly chart, that's the monthly chart. Look at the S&P. The S&P was looking absolutely fantastic when we were going to the highs, the intra-week high last week all the way into Thursday, and then kaboom, got that smash to the downside over there, but it's still a peak D. It's holding very nicely. It's up 32 at 45.77. The Dow was up about 100. The S&P monthly chart, later in the show, we'll talk about this monthly chart, what we're anticipating for April. I'm doing a webinar on that a week from Wednesday. Let's look at the QQQ, and that's what I said to subscribers this morning. These QQQs look like they have to play catch-up. They are desperately wanting to break to the upside, and that's a peak B. We should still get a leg C, and then a peak C, and then a leg D. So the Qs are up 6.89 at 368.74. They need to break 1 penny above 371.83 in the daily chart to start a leg C. You got the IWM, the Russell 2000, doing okay, but really lagging, also made that peak D. So the only one that didn't was the QQQ. Now we're looking at gold, and gold is up, but not as sharp as it was. It's up at 11. It's had a spectacular move. Now this lowercase h is going to a lowercase m. If there is a break into the 1978, 1982 area, that arch will change into a cup that'll be very favorable. I think we're going to stay in this consolidation a little longer. Crude oil, same thing, huge move up, and now big move today, up 4 at 103.46, but I think that it's kind of stuck in this range for a little while. If it starts to trade back in the 114, 115 area, that's very good action for crude oil. The TLT failing. It's down again today, down $1 at 131.32, and that means that yields are still up at the upper range, and that's something very important. If we look at the IYT, which is the transportation index, huge move down from earlier last week. We hit the 276 level. We're now underneath right on the 200-period moving average in the daily. But if you look at the weekly says, you know what? We're just in this big trading range, U-shaped once, U-shaped twice, triple top at the 287 level, 281, and then 280. So you can anticipate there's a lot of resistance, but we've got to keep an eye on both the transportation index because it does tell us quite a lot about the general market, and we've got to keep it in touch with the SMHs, which have pulled back very sharply, and they are failing to lead, and that's always something that makes me a little bit cautious. But I think the rotation is what we've got to focus on. The rotation says as long as there's rotational strength, as long as you see something like the growth stocks start to move higher after being, some of them were decimated. I mean, some of them like a square gets clobbered, comes down from 289 to 82. It deserves a break. It made a peak D in this cup formation. Left side, right side price time match says it's got another few days in order to try to get to the left side high, which was the high of 100 and the last high of 152.70, and that was back on the 12th of January. Went from 152, got cut in half to 82, and now it's trying to come back. It's a very good comeback, but when you've been at 289 square, that's called Block Inc., so that's really quite important. What we're also looking at, and I just need to check this so I can keep right on track with all the things that we do here at TFNN. I haven't had word there, so that's still good. Now, another thing that is really important, look at the VIX index, the volatility index. Why did I not type it in the right place? Volatility index, there we go. The $VIX.X, that's how I get it. It's at 19.08. When it was making those tops, a double where we are right now, back at the 38 level on the 24th of January, slumps down to the 19s and then screams back up to 37.79. And that's when the Ukraine situation was getting really bad. And yet with rates, Russia, Ukraine, I mean, all these things going on, and yet it couldn't break to a new high. Instead, it came down and has broken the rectangle lower base that was forming at about 20. And now we're at 1907. So all week, if we don't start running into the 2280 to 2350 area, but stay down under 20.20 in the 19s, perhaps even going lower, that's going to give buying pressure. So that as much as everything we look at says, this market, how can it go higher? There's such bad news out there. The market itself is rotating through different sectors. And my contention since the summer of 2010, after we had gone long there, what was it, March the 6th of 2009, got long the Dow, those corrections were all rotational corrections. Periodically, we've had those big sell-offs, and even then, very quickly, we saw the rotational correction find some strength. I'll be back in a moment. I believe we should have Steve Rhodes coming on, I hope so, for an interview. I'll be back in a moment. Basil Chapman sitting in for Tom O'Brien, Dow's at 9.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right. information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman here, sitting in for the one and only Tom O'Brien, and we are trying to get through to Steve. Steve's trying to get through. Steve, I hope you can hear this, and if you are able, I know there's a little technical connection there problem. We tried this, I think it was a week or two ago, and we had some problem, but call in, just say, I'm here. So interrupt me, I don't mind at all. I love to have a little interview with you, because you did such fabulous work. Let's get on with the show, and we're going to look at a couple of questions I had. Could I look at MU? MU is Micron. So my contention has been for quite a while now that the semiconductors, the whole SMH index does not have leadership there, number one. Yes, there might be leadership within the group, kind of like a little mini tide of leadership, but I don't really see anything going on there. And I believe at some point, there's just going to be a flood of chips coming in. And will that be the precursor of a massive move to the upside when you get the cheaper chips? Finding the automobile industry, just look at Ford. I mean, this is terrible. Ford goes from around the 26 area down, it gets cut in half. I mean, this is terrible. Look at General Motors. General Motors, all they talk about the electric vehicles and such, going from the 65 area down to under 40 and trading right now at 43. So all I can anticipate is that at some point, now we don't know when that point is, and if in fact there is, together with shipping, and let's just look at the shippers. Look at DSX. This is Diana Shipping. This is bulk shippers. Trying to rally. It got to it went down from the, well, first of all, it went from the 640 area down to 340s, and then tries to rally and gets up to the 550, 556 area, and then it pulls back. It's trading right now at 512. So when I dug over the weekend, dug into all these different shippers, look, NATs, Nordic American Tanker. So this is really the oil side of it. You would expect that it was at 9 back in 2020. It plummeted down to $1.40. So this is such a mixed market that I have to, as I said to subscribers, we have to just focus on what is working, what pertains to where money should flow. For instance, I mentioned we don't have this, the IBB, which is the IBB NASDAQ Biotech ETF. If you look at the monthly chart going from 177, what is about a year ago? Yep, back in February. Is that Feb? August of 2021. So you go from 177 down to 118, and then you have a really good rally, except that rally on a percentage basis is great. You've gone from 118 to 134. There's your leg D. There's your Chapman wave cup formation with the left side, right side price time match. We're almost at the 135.52 target that I've had for the IBB, although we don't own it just in terms of analysis. But really, this is a horrible chart. Look at that monthly. Look at that sharp peak F plummet. It hasn't even. This is the first time it's making a potential trough A. It's gone in one fell swoop to the downside. Now, that also is a good sign. Sometimes when you plummet and you have a waterfall cascade, you get all the selling out in one swoop, perhaps two swoops to the downside. And then you can have this inside rectangle formation that says you can have a rally with a lopsided cup formation. It's kind of what we're seeing in the daily, back to one of the left side high, and that's that 135 area back in early February. But this is the NASDAQ biotech area. This is the area that led the market up. One of the leaders going to the 2021 high. So there's a lot going on. But within that context, I think you have so many areas of weakness that you've got to look at the strength as being very select. And I think that's the operative word. And that's the operative word that I'm going to be focused on when I do my webinar a week from today. It's for my opening call subscribers. Let me just put this here. Tom usually does that. I'll just do this right here. Opening call newsletter by Basil Chapman. You can go there, and this webinar is going to be an hour and a half, Wednesday, April the 13th, and it's only for subscribers. There's a lot of information, a lot of technical stuff that I'll be doing, showing how these different patterns work and get repeated over and over and over. And the big question, the heading of it is, will there be new highs in 2022 in the major indices? And my contention is yes, there will be. But in the selectivity, we might even find, I'm not saying this is the outlook of my analysis, but there is even a chance that we start to see a rally that rotates and that we finally get maybe a new high in the monthly chart of that of the S&P, because remember, if in the Chapman wave buy signal to buy mode, there should be at least 4 higher peaks, and the monthly chart is in a buy mode. There's no other way I can count it. Then peak B should see a leg C above 4,818.62. Doesn't tell you how high it can go. And here's the other thing. You see the way there's a chance that we could make this cup formation with a double top. Well, how about this? Double top. What was I looking at that I thought I'd show today as a double top example? There are so many. Let's go to, I think MU was the one that I was looking at. Oh, yeah, there it is. MU makes a top at 96.65. That was a peak in the monthly chart early in 2021. And then in 2022, in the week of January the 7th, it goes to what? 98.45, just a hair above. And there's this cup formation. And what I like to do is I like to say, what are the technicals at this high? And then you get your V-shape or cup formation. What are the technicals at the price point? Because price is the arbiter of a trend. When it made that next high, well, the MACD deflected lower. The stochastic was way under 80%, but the on-balance volume, the green line in this monthly chart, is still extremely strong. For Micron technology at 77.67 right now, up $1.49 to really get a sell mode in the monthly chart, you probably would have to see that 9 period under the 14. And I think that would take you down to about 62. We're at 77 right now. So look at the cup formation in the weekly chart. And this has been one of the better ones I've been saying for a while. As we were going to the high of 98.45, I said, wow, from the chart formation up until now, Micron has had one of the better views. NVIDIA, let me just double check here. NVIDIA was one of the better ones. You see what I've got here? This is the Chapman methodology. Every single notation you see on every single chart, whether it's the 1 minute chart like this right here, the 1 minute chart having gone to Let me just get you this right here. There. Having gone to, in the 10-minute chart, I've done 1, 2, 3, and 5, 1, 2, and 5-minute charts. But look, here's the 10. Is this a brand new buy? Is this a leg F that has continued up? Or is this a C? Well, we don't have to make any decisions because the 9 is way above the 14. It made a peak D already with a big consolidation. The MACD is good, not great, but it's good. Stochastics at 88%. I love 88%. That means that there's still internal strength. So that's the way I like to look at these things. So that means that the S&P somehow, some way, and I could be wrong, we'll get to that leg C in the monthly chart. And NVIDIA is having a high-level consolidation. It doesn't look bad, but it doesn't actually look all that great either. But it's one of the better ones in the semiconductor. I'll be back in a moment. Basil Chapman sitting in for Tom.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman sitting in for Tom O'Brien. Dow's up 65, S&P's up 31, and just got a quick message from Jane asking me, hi, Basil, I would like to ask you to look at Lulu. Could you tell me where to enter and where it's going? Thank you. I'm not in it. Jane, right now it's at 380. I think within the next week and a half, my time, left side, right side price time match says 406 should be the target, but we'll get back to it. I first want to go to Steve Rhodes. It's my pleasure to be having Steve Rhodes as a guest. And how are you, Steve?
Nice to be with you.
Good. Good to hear your voice.
Great. Hey, I thought what we would do today, make the case, both sides of the case for the bulls and the bears. So let's begin with the bearish case as far as my outlook for the market and what things and the reasons why. And the first reason, Basil, is because when I take a look at the yearly chart for the S&P 500, that's what we have up on the screen here, it has what I refer to as a TD9 count top. And you don't get these that often, but the TD9 count tops work the same way no matter what time frame it is, whether it's a yearly, a 5-minute, a daily. And so we've got that topping signal, which at this stage here has taken hold. So that's the first element. The second element is I step down from a yearly chart and go take a look at a monthly chart. The monthly chart for the S&P 500 has a TD9 count top as well, so much like the yearly does. And with 37, 23, 34 being its downside price target. And what's nice about this TD9 count system is it provides us with an objective level to help identify support or resistance or where price broke out from. So on a monthly basis, the S&P breakout level is 37.23, and as long as price remains below this green line, I refer to that as the oscillator and change line, that still is a potential. So that's item number 2. Number 3, the weekly chart for the S&P 500 has a Rhodes momentum indicator top. I also have it as wave number 7, so that's your letter G, part of your rogue wave. So we got those two tops that formed at the high. Now, what happened here in the weekly chart is price pulled all the way to that breakout level. That breakout level, again, being established by the TD9 count level tool. And 41.6440 was that breakout level. So price hit that. And now we've got price trading for week number 3 above this green oscillator and change line. When I get two closes either above resistance, which the green oscillator and change line was, or below support, to me that's a confirmation of what the market's intent is. So the weekly chart now says this wants to continue to move higher, but we want to monitor that this week and obviously for the following weeks. When I take a look at a daily time frame chart for the S&P 500, a couple days ago it formed a TD9 count top. And this little oscillator and change line, when it changes color, in this case here it went from red to green, what we typically see is price and that line catch up to each other. So several hours ago that was priced about 45.07. I'm still anticipating that to be the move. The only thing that would change that is to take out the high from about 4 trading sessions ago. So that'd be number 4 reason. When I take a look at the charts here for the ES Mini as well as the S&P, so at the top I've got the S&P charts that we looked at. We've got the same patterns going on inside of the ES Mini. The nice thing about the ES Mini is it provides us with profile levels which provide us with additional support or resistance areas. Another element to add to the bearishness is the stock market does not like war, and meaningful bottoms typically do not form until there's some type of sense of an optimistic outcome. And this is showing the World War II cycle, but we can go through every single war cycle and it really does the same thing. So that's another reason to be concerned, or that would be add to the bearish case for the market. Now, another item, and I'm going to switch gears here. We're going to go from the S&P, Basil, to the NDX 100, which is the bottom portion of this screen. And I was turned on to this by one of our guys in the Tiger's Den, John from Philly, who I believe got it from a guest of Larry Pesavento's. And that individual was suggesting that the NDX 100 might follow along the top that formed in the Nikkei 225 back in 1990. So what I do is I reprogrammed my system so that the NDX 100 topped on November 22nd. I believe it was January 5th for the Nikkei. So I
right after the long weekend, the New Year's weekend, I remember it very well because I also had a peak E, I believe, in my in my Nikkei chart. Yes.
Perfect. So what I've got here, so it had your peak E. Both of these topped with the Rhodes momentum indicator signal. So this is updated in essence through today. Of course, the NDX 100 is still running right now, so it's not exactly priced exactly right. But you can see that the analog or the parallel is very striking. If this analog were to continue, and so here now I've just gone to a little graphic chart that I've created inside of an Excel spreadsheet out here, and so you can see how it's following along very well here.
Yes.
Yeah, if this analog is to continue, this says that we've got another major down leg. Now, from a timing standpoint, if we're to continue, it equates to about the early part of June out here. So we'll want to keep track of this as well. So those are all of the reasons to have a bearish case out there. But we always have to look at both sides of the trade. And so the bullish case for the stock market goes like this. First, interest rates are rising and should continue to rise for the foreseeable future. I don't think there's anybody that thinks otherwise. Now, many people, I hear a lot of media folks out there that say this is the reason that the stock market should go down. But those folks don't really take a look at charts or history. Here's 30 years worth of history. The top portion of this chart, and I'm using for interest rate rising just the 13-month or 13-week T-bill out here. And so you've got the rates rising. Those are the green arrows going to the upside. When you start taking a look at the S&P chart below, you also see that the S&P 500 moves higher during those time periods. So that's a case for the bulls, not the bears.
It's essentially implying that money, the huge amount of money, people don't realize just how much is in bonds. When that starts to come out, it has to find a place to go. So that's another reason why you could see some money filter into the stock market.
Absolutely. And the most important thing that really I want folks to understand is that rates rising, again, if you come back, now this is a monthly chart, so you get knee-jerk reactions out there. So I'm not talking about the 1 day, 2 day, but overall, if we take a look at over the last 30 years, when interest rates rise, so too does the S&P 500. Another reason to be bullish, now I showed the war chart there. Russia invaded Ukraine on February 24th. And oddly enough, or maybe it's not oddly enough, the actual bottom inside the S&P 500 took place on February 24th. So it's doing the exact opposite of what we would typically see in our war-based charts. So that's a reason to say, well, maybe what we really have going on here, what the market senses, is this is more of a geopolitical type event. And typically those bottoms from a geopolitical event standpoint happen the day that that event actually takes place out there. So a reason to consider the bullish side. Now, when markets make major tops, Basil, you know that I take a look at instruments priced in the major currencies, those major currencies being euros, yen, and pounds. So on the left-hand side of the chart, we've got the Dow priced in dollars, next to that priced in euros, next to that priced in yen, and next to that pounds. Now, when markets make major tops, what we'll typically see is they will all make a high on the same day. Well, because we're dealing with Europe, we're dealing with Japan. Here, you've got tops that took place on January 5th inside the U.S. market. And then inside the Dow price in euros, that took place on January 4th, as it did for the yen, as it did for the pound. However, when we take a look at what has transpired since that top, we can see that priced in yen, the Dow made a higher high. So that says, because we don't have everything lined up here, that what the Dow price in yen is telling us is we should expect to see a move higher. When I look at the weekly chart for the S&P 500, which we did before, prices above that green oscillator and change line. The oscillator and change line tells us that we have a rising price oscillator above zero for the weekly time frame. Basil, and that is a bullish condition out there. And also, lastly, prices trading above the top of the profiles for the ES Mini for the weekly basis. That, too, says that these are bullish conditions. So we've got it for the bulls and the bears out there. So
I really appreciate it. You do fantastic work. Folks, go to the front page of TFNN. Check out Mastering Probability with Steve Rhodes. He does some fantastic work. I'll talk about the TD9 when we're off. And I appreciate.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Hi folks, we're back. Basil Chapman. I have to say thank you, Steve, and don't forget, go to the front page of TFNN and you will just, Steve does really terrific work. And what I found over the years, what Steve does really well is he takes a particular methodology and he digs and he digs and he digs, and then he turns it into his own interpretation, besides which you've got your core position and then his interpretation is really good. He's done the same thing with the Chapman Wave methodology. And at TD9, I remember back in the 1990s with my partner, we had this fund manager, big growth and income fund out of New York. And this guy had this thing. I don't know how they allowed him to do it, but he was into silver. He would have all the silver stuff. And he introduced us to Tom DeMarc's TD9 methodology. And when I used to run it with my Chapman Wave at peak Ds and Es, I found that I didn't get the coincident tops and bottoms that I thought I would. And I kind of started to ignore it, and I used my own methodology, which, of course, I'm totally satisfied with. But the way Steve has introduced us back into this whole thing of Tom DeMarc's TD9 count does a brilliant job with it. So, I recommend go to the front page, check it out. Steve's work is always much appreciated by everyone. So let's see. So we've got here. Jane wants to know about Lulu. So this is Lululemon Athletica. This is sports and apparel wear. Made a peak E-top at 485.53 November with a round number open that month. It's unusual to open a month with a round number. It did 468. And then it has a little bit of a pullback to the 280 level. I would say almost cut in half. This is a big move now. So what I've done here is I've shown you that we've gone to a peak C. The left side high of 406, a round number high, way back in about 27th or 28th of December. December saw this continuing pullback. There's that H pattern that failed. It tried to rally, made a second one, like a lowercase m. And now this H to M pattern is forming a cup. It's more like a bowl because it's spread out, which means that Lululemon should have upside, but at some point it's going to hit a lot of resistance. And I suspect that it's going to make a peak D. So where would I go? Jane, the best entry point, because there's a gap now, the best entry point, I think you've missed the best entry. So why not work out the proportion of what you want to be in? But I would right now at 382.20, I would start the position thinking that at least a leg above peak C of 309. So that's what is that? That's 18. Yeah, it's about 20. Yeah, it's a good fair number of points. It's more. It's not 10. It's about 8%. But if it holds and the MACD can hold in the 85 to 90 percent area, this could even go a little higher. So I'm saying right here at 382. But this is not the best entry. This is where you the position that you're going to have to take, you're going to have to moderate to the extent to say, I can't have the same position because it's now already gone. I mean, let's face it, from the low that was made, right here, at 278, round number low. Oh, I love these round numbers. 278. Who had a round number low? Was it? Yeah, one of the biggies. Was it Facebook or something? Right, 278, and it's already at 382. So it's over 100 points. I mean, that's a huge move up. So I'm just going to say you can't have the same number of shares, but this is where I would go. What would I have as a stop? Because this is not the real position that you wanted. You can have a slightly wider stop. Now, today's low is all the way 368. I don't know. I wouldn't have that. To me, going in at 382, I would lighten up if it hit 376 by Wednesday. If it rallies above the high and starts leg D, I don't think I would add. And you haven't been stopped out. I would raise the stop, but I would take a little bit off as it took out peak C. That means, and in Lululemon, if it's able in the next day or two to push above 389.15. I would say add to that position, but it's already leg C and you're going to leg D. So I'm going to say take a little bit off to reward yourself for the position. And then give me a call on my show, the Tiger Technicians Hour, at 10 to 11 in the morning, and we can look at it together. But in the meantime, that's what it's doing. And that weekly chart says that it needs to get into this reversal candle of December the 31st with a high of 406 round number. Oh, that's when it did the round number high. 406 and 391. So far, it's doing everything that it should. And I'd already drawn this pattern: cup formation, left side, right side, price, time match, etc. So that's Lululemon. In the day, we had a question: could I look at Home Depot? HD is, it broke to a lower low in the arch formation. It's done that. Look at the 200 period moving average. It went from 343 up to the 370s and couldn't. This is a stock that was at 420 in December and is trading now almost at the low. The low is 290, 298.89, 280. Oh, wait, was that? Yeah, so this is 89. Yes, it makes a 1 penny turnaround. So all I can say is that Home Depot, to tell you the truth, you could do it as a trade. I just don't see it right now. As I can only see it as a trade. But because it's been, if this H pattern, you see, if the MACD was a little lower and turned around, I said, and the stochastic is only at 8%. I tell you what, I would treat Home Depot as a trade if it can go 2 points above today's high. If it 306.48, if it can get to 3, in fact, tomorrow, if the general market by 10 past 10, after 40 minutes after starting the day at 9:30 a.m. Eastern Time, if Home Depot is just a point above today's high, whatever that is, so far it's 306.48, I would start. If you want to be long, I'd start a position. I'm thinking that maybe the best short is done, but it could just go sideways, and I suspect that it's going to trade between 318 and probably 283 over the next 2-3 weeks. That's kind of, or maybe 4 weeks. So I'd have. This is your best risk reward in that it's double bottomed. And that's the reason why I say if it goes just a point higher than whatever it closes at, whatever the high is of today, if it can go a point above that as a trade, and it's at 300, let's call it 300, you get in at 307. I'd have a 3-point stop. I wouldn't give it any room whatsoever. All right, next question is FIB, Facebook. I still call it Facebook. Of course, it's called Meta. But and Dave White calls it Metamucil. I think that probably is the most appropriate term. What we are looking at here is Facebook or Meta is trading leg E. It's starting to get towards the gap. It's got this huge gap. If ever in 2022, Facebook actually breaks into the 325 area, 330, and fills in this huge gap, that'll be the most bullish thing that it could ever do. And I would say then it's back on its way. I've got the Fibonacci's here in the monthly chart. 161 is getting close to that resistance. I just think that Facebook is one of those that's having a pretty decent bounce, and that's what's helping the QQQ, which subscribers went long this morning in one of the mediums of QQQ. See what happens in the next 2-3 days.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. Basil Chapman sitting in for Tom O'Brien. So this is a pattern that we talk about a lot, and that is where prices go higher, 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 and then all of a sudden they turn down, they make lower highs and much lower lows. It looks like a falling axe. I call it the falling axe, and it's an expanding cone formation. And then all of a sudden it finds support, and then it breaks that upper downtrend line and then could go one-to-one to the upside. Well, we've just seen that in a whole bunch of charts today. You've got that here in the QQQ. So Dan in the Den is asking about the TQQQ calls. He has them, I believe. Did you say TQQ calls? Yeah. So I believe that you do have the TQQ calls. What I would do is this. Because I think that it's going to a leg C and it's going to do it sooner rather than later. In other words, this is a move that has to continue right into Wednesday. Normally, I would say you take off some right now and just keep running because we're getting close to a Friday. But this is only Monday. What I'm going to say to you is that you're going to get your very best price today on the rally in the premium. So why don't you take a little bit off right now? If there's any pullback early tomorrow, and I don't have any Chapman wave trend gauge clue. So if there is any pullback tomorrow, you can actually get back into those. But I think that we are going to go to leg C in the QQQ. You are 3 times long, and you're looking at calls. That's a really nice move you've had today. 371.84 will start leg C. So with that said, let me just do a couple of things. I've got a webinar coming up a week from Wednesday. It is for opening call subscribers. You can become a subscriber. Well, for today, some people might have used just today's position to be able to pay to become subscribers. So make sure that if you want to come in, you will be able to listen to 8, 9, 10, 11 webinars, and I discuss all these patterns in them, and I will be going through a lot of patterns in the webinar to teach you what you can do. Look, there's falling axe. There should be a 1-to-1 break to the upside. We'll be watching that closely. So I'm going to sign off here. There was a quick question, and I didn't get to it. I'm sorry. I'll do that tomorrow in the Target Technicians Hour at 10 o'clock. Again, congratulations on positions. So, folks, have a wonderful evening. I believe this should continue because it's select and the Qs, Index 100 is leading the way out.